Hi, my name is Phillip Warrick, and welcome to My First Deal, which ultimately led to millions. In this podcast, we explore the pivotal first deals in real estate and business that define what type of investor you are. Whether it was a deal that inspired you the most or a challenging one from which you learned valuable lessons, each story is unique. We interview very successful investors, local real estate groups, business moguls, authors, and celebrities from all over the world, providing inspiration and insight, whether you're a seasoned professional or just starting out. Today, we've got a very special guest, my friend, Damon Davis. Damon is a successful real estate investor and podcast host of Who Am I Really podcast, telling the true stories of adoptees and their journey to finding biological family members. Damon is also one of my fellow insider members of the Investors Network, the JT Fox Mastermind Network, where we fund deals, invest together in deals with the group literally worldwide. Damon, welcome to the show.
Great to see you, Phillip. Thanks so much for having me, man. I really appreciate the invite.
You're welcome, man. It's great to see you again as well. So just wanted to kind of give you a chance to introduce yourself to the audience and tell them, a little bit more about you and kind of what motivated you to do that first real estate deal.
Absolutely. And I appreciate the mention of the podcast because it really is one of my passions. So I'm going to start there just for familiarity with folks. I'm adopted. I'm in reunion with my biological family members. And basically, as I traversed my life telling the story of my adoption and reunion with my birth mother, I would encounter people who would say, "Oh my gosh, that sounds like a movie. That's an incredible story." And every once in a while, I would meet somebody who would say, "I'm adopted too, but that'll never happen to me. And here's the reasons why." And they would say things like they were scared to try to seek reunion because their adoptive parents might get their feelings hurt, or their adoptive parents have said quite clearly, "I don't want you to search." And so I realized that my Disney awesome version of adoption and reunion was only one version of adoption and reunion, and that I really wanted to help more adoptee stories come out. So that's been a project of passion that I've been working on since 2017. I've written my own memoir, and I'm writing a book based on the stories and experiences of other adoptees on the podcast. So again, it's called Who Am I Really? And again, I thank you for raising it. In
You're
terms
welcome.
of my real estate journey, that began out of another passion of mine. And I'll tell you a quick story about my dad. My father was a wonderful entrepreneur here in the Washington, D.C. area. I live in Silver Spring, Maryland. And my dad created with his partners a consulting firm that was working on federal government consulting and contracting for many years. And they were prolific and they sold the business for a large exit. It's the kind of exit that a young guy that he was from Kansas City, Kansas, would have loved to have had back in his days, sort of growing up in the hood, not really seeing what the future was going to be. This is a big deal, a dream come true for him. The challenging part about that was my father had no money mentors, as I call them. He didn't have anybody to help him understand compound interest, the power of investing your money, buying assets over liabilities. And my father came from a community that bought, basically, I like to call it all the shiny shit, right? They bought the cars and the shoes and the clothes and the things, and they didn't really invest in the stock market or buy real estate or things like that. This long story short is, unfortunately, while my father had a wonderful life and he had amazing friends and had some great times, he died broke. He didn't buy anything of value that was going to continue to put cash back in his bank account. And therein was the problem that I found with how I grew up with money. We didn't talk about money. I know that he paid for college, but I don't know that he paid for it out of his bank account or whether he took advances from the company. So I didn't really have any good lessons as to how money should be handled. And I went on a wealth building journey, which is when I met you, Phillip. And along those lines, I recognized the power of owning real estate, that taking whatever cash you have and putting it into an asset that is both growing in terms of how the market is pushing it up in terms of its appreciation, but also the power of another individual who is paying your mortgage. They're renting the place out and they're paying all the bills, and that asset can sit there and I can then draw from it later and buy another asset with whatever other savings I've accumulated. And then I've just had some sort of opportunities to get lucky too, as we sometimes like to have. So my real estate journey has been varied, but it's been a lot of fun, and I really enjoy having real estate as a backbone for, what my retirement's going to look like. And I'm looking forward to more investing in the future.
Beautiful. I love it. And you touched on something that brings up a really good point. And as real estate investors, I talk about often there's 5 different profit centers that we're looking at, right? And when we're buying a property off market, as an example, the hope is that we're going to get some equity capture the minute we buy it, right? Meaning that we bought it a little bit below market value. Rather, it was a distressed property that needed to be fixed up, and that's why we were able to get it a little bit cheaper, or a distressed seller for whatever reason, we can get the house a little bit below market value. And another one is principal pay down, right? A lot of people don't think about that, but every month when a renter pays us rent and we use their rent to pay a mortgage payment, that's bringing down the balance of that loan if we leveraged financing to purchase that property. And then there's appreciation, right? The property values tend to go up historically every year a little bit, you know what I mean? So I think most people say they're going to double every 10 to 15 years, right? So there's going to be years where it might go down a little bit or dip a little bit, but there's years that are better than others, right? And so that's the third profit center. And then the fourth one I talk about is cash flow, the difference between the rent and your holding costs, right? So if the rent is higher than your payments, you're getting some cash flow. And then the fifth one is the depreciation, all the tax benefits of owning that real estate.
Hmm.
You know what I mean? So
Yeah,
if we only focus on one, investments can be scary. I have a friend that said, no risk, no goodies. We're taking some risks, but all investments are a risk, but these are educated risks, right?
absolutely. That's what I always say. I like risks, but I like calculated risks,
There
right?
you go.
I'm not just going to jump off the cliff. I want to see how far down it is, and is there water down there, or do I need a parachute, right? Like, what's the plan for this jump? And I think it's really important for people to run their numbers really carefully and conservatively on their investments, right? It can be so intoxicating to look at an investment and go, this is going to be great if only this little margin works out perfectly. And that's ridiculous. It's so rare that that margin works out in your favor. It doesn't make sense to invest with that kind of risk in your portfolio. So having calculated far more conservatively when things don't go quite your way, hopefully you're still within your margin and it works out just fine.
Beautiful. So well said. And what I want to ask you next is, like, for a lot of people getting started, right? Because we talk about getting started in that journey to becoming a millionaire real estate investor or having a multi-million dollar portfolio. But how did you finance your first real estate deal?
Yeah, great question. I'll start off though with something somewhat unrelated, which is the mindset. You have to have the mindset that you're going to do this. And so I started telling myself, I am a real estate investor. I started to adopt that identity, because if you don't do that, then you're never going to be what it is that you set out to be. It's the same thing as going to the gym. If you just say, I need to get healthy, but you don't actually call yourself an athlete, and I'm going in there to be physical, you're going to deliver half of the effort. So I started with the identity, and I really began to call myself a real estate investor, and that will come into play in one of my future properties. But with the very first one, I learned about the process of taking your money from your retirement and collecting what's called a self-directed IRA. And so basically, for anybody who doesn't know, if you've been working at a job for many years and you've got 401k dollars just sitting there waiting for you to retire one day, you can actually move that money into what's called a self-directed IRA. And that allows you to invest in anything you want, provided you set up the correct parameters. And I say that carefully because I don't want people to just say, I'm going to go withdraw my IRA money, and now that you've incurred a taxable event. So you have to set it up correctly so that you don't incur taxes on that money, because you've already paid the taxes by virtue of those things being in your retirement. So I set this self-directed IRA LLC up correctly using a vendor who supported the whole process, established the bank account, which is separate from my own bank account. And I took that money and I put it down on a property in Jacksonville, Florida. I got a remote property manager who managed the whole thing for several years. And to be candid with you, Philip, I forgot about it. Like, I didn't pay a whole lot of attention to this property at all. And a couple of years later, the guy's sending me statements and stuff. And I, unfortunately, am not super into, I'm not a detail oriented person. So I would glance at the reports and be done. One day I sat down to look at this property and I bought it for probably over 15 years ago. I bought it for maybe $35,000, small place. It was doing fine. And the next thing I know, this thing is like worth $80,000, $90,000. And I was like, holy crap. I just bought this, sat on it, and it appreciated that much. I couldn't believe it. And so in the interim, I ended up buying another one down there. And this one was closer to 100, and it ended up appreciating well over $100,000. And it really got me the bug for this kind of real estate investing. And so my first attempt was actually taking money that I already had sitting elsewhere, this retirement money, this self-directed IRA LLC. But I also then began to recognize that I need to save money in what I call my present day dollars, not my retirement dollars. So I really began to focus. I set up a specific account and I set up automated transactions that would go from my paycheck into this automated account. And I set up automated savings. And that was another way that I started to get my investing together. And then I've had several other different kinds of deals go forth after that.
Wow, congrats, man. And a lot of people talk about self-directed IRAs, and the strategy for most people is just, hey, Philip's got some deals over here. Let me invest some of my self-directed IRA capital, get it out of the stock market or whatever it's
Yeah.
invested in currently. And typically they'll get like 8 to 12% returns, right? But by setting up your own self-directed LLC owned by your IRA, that's some pretty advanced tactics there, man. Good job.
Yeah. Thank
Congratulations.
you.
And
It was a lot of fun to set it up because, like you said, it's your own. I own that. I could have bought a gold bar or I could have bought a McDonald's franchise, and I chose to purchase a piece of real estate, and that has yielded dividends because I was able to turn that around into some other real estate later.
very cool. And you validated the fact that I mentioned earlier where property values tend to double every 10 to 15 years, right? So,
Absolutely. I mean, do not let it be lost on you that someone else is paying your mortgage and that property values are on the whole going up. If you look at the left side of the graph, it's on the low part. And if you look at the right side, it generally goes up.
yeah, very cool. So, we have to admit, right, that not all of this comes without challenges, right? And you forgot about a property, and man, lo and behold, it doubled, almost tripled in value. But tell us a little bit about some of the challenges that you faced in your real estate investing so far.
Yeah, it's a great question. And there have definitely been some. I ended up selling out of the Jacksonville properties because they were not performing as well as I wanted to. And I think you need to be cognizant of your numbers and recognize when that dog's no longer hunting and it's getting old. That property and the area that it was in was not appreciating the way that it had in prior years. And so you have to stay cognizant of the area that you're invested in and make sure that you continue to see the appreciation, the investment from the community to continue to bring that property value up. And when it stops being as profitable as it was before, you need to recognize that early and cut and run if it's the appropriate time. So I began to recognize that out of one of the properties. And so I sold in order to just take the cash that I had on hand. I didn't want it to depreciate. I didn't want anything to happen. I wanted to have the cash so that when the next opportunity came around, I would be well positioned to invest. And that's what I did. So I said I sold out of Jacksonville. I live in Silver Spring, Maryland, which when you look at the Washington, D.C. map, there's a point at the top, and my house is literally on the point in the Maryland side. So I'm very strategically placed near D.C., which means almost all the properties around that area are of decent value for people who want to come to town, go to D.C., do all kinds of things. So I recognized that there was a small office building that was being converted into condos in a project. And I said, that's going to be a wonderful investment. So having sold Jacksonville, had the money on the side, I took that down payment and I put it on this condo here in the DC area. I guess the challenge of that was dealing with a condo conversion. which has inherent challenges to it, right? A building is not necessarily built to be an apartment building when it was once an office. And so on the builder side, there's a lot of attempts to cut costs as well. They want to turn this building over for the maximum profit and the least amount out of their pocket. And they cut some corners. They did some things like they promised they were going to replace the elevator. This old rickety ass elevator is still in this building, which is highly inconvenient for any of the tenants, the owners and the renters that I have. They didn't replace the roof. So the people who are on the upper floors are getting leaks from the building. And so it became really challenging to continue to own this property. And I really, truly thought about getting out of it. I ultimately decided to keep it, but just that constant churn of thinking you've bought a property, thinking it's going to be settled, that there won't be any further problems actually is not true. You will always have some kind of issue that you have to deal with. And in this case, it's been the condo HOA, right? The condo association that has been, trying to sue the builder and get all the people in the community to agree on certain parameters. They set up the condo fees and they set it up for it to be really attractive. So the condo fees were super low going in, but then there wasn't enough cash reserve. So now they had to raise the condo fees, by 150% or whatever. So it's things like that that have been really challenging. But on the whole, I've been fairly lucky. I got to be honest with you.
Very cool. And I think that's one of the things with real estate. It is very forgiving, right? Sometimes we have to hold longer than we anticipated, as an example, right? If things don't go exactly according to plan, but we always learn and keep growing. And, I like to say that you got to be prepared to pivot and figure out, hey, what's the next best strategy for the investment? And depending on the different scenarios that could take, um, so how did those deals kind of compare to like what your expectations were, before you got started in real estate?
You know, it's funny. I tend to be a pretty positively oriented person, right? I usually think things are going to work out. And if they don't, then what lessons have I learned? And I definitely learned some lessons about getting involved with condominiums, right? There's a lot of variables there, and it can be challenging to deal with multiple owners in a situation like that. It can be lucrative, right? That property, I do what's called a medium term rental strategy, and I
Okay.
utilize Airbnb. So, a lot of people think of Airbnb as being just short term, and people come in for a weekend and they dip out, or they come in for a week and they're gone. And I knew that I didn't want to have constant churn on my property and have to constantly be sending the cleaners in there, which is going to be hundreds of dollars. I wanted to have a much slower churn on a property, but still have it be lucrative and not so illiquid that it was a long-term lease for a year. So I do a medium-term rental, which is for me 29 nights, 30 days. And that gets over a lot of the local restrictions on Airbnb, which, a lot of communities and municipalities are going against Airbnb. There's a lot of resistance against these short-term rentals. Having a medium-term rental gets over a lot of those challenges. And then I also find I get higher quality tenants. So I've ended up getting lots of professionals who come to DC and do a variety of work. I had a guy who was coming to set up the Tesla maintenance facility up the street from the condo, like just all kinds of amazing things. But in terms of things that I didn't expect, I think, um, you know, just the ongoing maintenance is a constant thing you have to think about, right? It's everything from like day-to-day stuff like a clogged toilet to, the challenge of having making sure you get in there and remember to change the air filter, right? So that the AC continues to work for your clients and you're not inconvenienced by them being inconvenienced, etc. So sort of the proactive planning
Yeah.
of your property's maintenance is one thing. I think also just recognizing that you have to reach a point where you are considering, getting a bookkeeper and some teammates who are going to support your journey. Because as a solopreneur, as a solo sort of property manager or what have you, there's only so much you can do. And when the LLC filing needs to happen and the AC filter needs to be put in and you need to schedule the cleaner, like that's a lot of stuff to have on one person. And you really need to start to think through, where does my team come in as folks who are going to help me manage the entirety of the process? And even setting up processes, I think, is incredibly important too. So those tend to be some of the challenges that I didn't think through, right? You think you're going to put some money down, I'm going to find a renter, they're going to go in the property, and then that's it. That property's solid. But there are ongoing things that you have to do on a regular basis with each of these properties. But like I said, I tend to be a very positive person, and I remind myself, I asked for this. This
Yeah.
was what I wanted. I wanted to have real estate investments. I want to have residual income. I want to have assets that will be there in the future for future generations to make income off of. And when I remind myself that I asked for this, then I'm able to go forth and say, this is exactly what I want to do.
I love it. I love it. My wife and I were, well, I was poking fun at her and just kind of joking around with her just the other day. It was a couple of days ago. And I often joke with people and I'll say, man, I'm just getting started. I've been in this business for 23 years, 21 years full time. And my wife has been my business partner this whole time. Right. So
Yeah.
we're going on 23 years, Damon. And I often joke with people like we've been married, we live together, we work together. You know what I mean? So we're together 3 times longer than most married couples because they usually,
Mm-hmm.
part ways for work. Right. So
Yeah.
technically, probably been married 70 years, right? If you look at it in
You guys are
time
married in dog years.
you know what I mean? But I tell her, I was like, hey, we're just practicing, and it gets to the point too. It's like, hey, we've been practicing long enough. We've proven the system. I went full time in 2003. I bought houses in 2001, 2002, 2003. I think that was the year that I did like 4 deals instead of like 1 or 2 deals a year. And I was like, wait, I think this is a legitimate business. We can go full
Mm-hmm.
time now. And then we're always testing these different strategies and like, hey, let's turn it up, let's turn it down. And we've had the blessing to be able to have a pretty nice lifestyle with 4 kids. And we didn't do the flashy cars and extravagant things that most people probably would use to like show their success because we had kids, right? We're family oriented. But we've built a pretty successful business. And I joke because we're still getting started. We're in the process
Yeah.
of bringing on more investors and kind of like a fund strategy where they could actually participate in some of the investments with us and actually participate in all of those profits, and there's not just a return on their capital. So it's exciting to be able to do that. But the point of all of that is back to your point, right? Creating standard operating procedures, right? Those
Mm-hmm.
SOPs for the business, putting people in place to do the work that we don't shine at, right? The things that have to get done but we don't want to do, right? Because anything
Yeah,
that you
that's
have
right.
to do, you don't want to do, right? So there's always that growth. But I wanted to ask you just to kind of peel back a little bit because we're considering pivoting some of our short-term rentals into midterm as well, right? We have 47 listings right now on Airbnb with a couple more in the setup process right now. And so we're trying to figure out, hey, what do we need to do using Airbnb and using all these other platforms? So what are some of the strategies that you're using to attract those 30-day bookings or longer? And are you finding them on Airbnb or are you doing like more of your own marketing for that?
I'm actually using only Airbnb and I'm not doing any additional marketing. And I've thought a lot about the need to, you know, better manage the websites associated with each of the properties and things like that. But the truth is, my market here in the DC area is so transient for the hospitals that are around, for the government contracts, for universities, etc. I mean, it just stays rented. I've been very fortunate that I have not had to do any additional marketing. I will say one of the things that you need to consider as you're going into the midterm rental market is, when you set it up for a 30-day period on Airbnb, if someone rents your place, and it says 30 days or more. So if somebody rents your place for 45 days, they've now occupied it for a month and a half. There's a 2-week window in there where it's unoccupied. And while that can be great in terms of going in and doing maintenance, it also is a lost opportunity for you. 2 weeks worth of income can be significant to some people. And so you have to, as you're running your numbers, consider what is the bottom line number that I can accept over this 30-day period that is going to absolutely cover all of my expenses, such that when the next rental comes in, I don't have to worry that I've maybe missed those 2 weeks that I just alluded to. So that's definitely worth a consideration. So I would think through what your actual markets are and what the attractions are to those places. And you actually could create some relationships with some of the people around town. So, for example, if you've got, hospitals and universities around, what is their directory for when someone has to come to town for a long-term stay? How do they find out from that system, where people go? And if you can put your listings into something like that, that's a great localized piece of marketing that will be very assistive for those people who will find your property. So creating some of those local relationships can be great.
I like it. I like it a lot. And are you using any property management software to help you? Or are you just using just like straight Airbnb app and that's pretty much it?
I use a straight Airbnb app, and I let my bookkeeper go in and manage all of the incomes and outflows from that, and
Okay.
and that's
Okay.
basically it.
And then what about your pricing? Because that's been one of my resistance to the medium term or what I call midterm, right? Looking for those 30 days or more. It's been the resistance to figuring out, man, what's the fair price to ask, right? Because I could look at it like, hey, this is my cost, at least cover the cost or maybe a little bit of profit. But if I compare that to what we could potentially get as a short-term rental, short-term rentals are usually a little bit more than a mid
Hmm.
than midterm is a little bit more than like a long-term tenant, right?
All
But
right.
how have you figured out or landed on like pricing strategy for that?
Yeah, and Airbnb is pretty good about helping you to figure out some of the seasonal stuff too, right? They'll tell you, you're going to be high market in Christmas and all these other travel times, and low market in these other, midweek in whatever, regular time of year. And so I spent a little bit of time just sitting down and writing down where are the numbers throughout the year to see where there are opportunities for fluctuation. I don't want to try to pinpoint it too much because you could mess yourself up and price yourself out of the market. But I try to stay within a certain margin. But I think that it's worth it to consider what Airbnb offers you as the trajectory throughout the year
Right.
and try to figure out what your numbers could look like at different high times. So, for example, if you've got some summer rentals that just do gangbusters starting from, late May through August, clearly you've got some pricing opportunities there that are going to fall off a little bit. And you could offer some different pricing in the winter months that can be attractive for somebody who needs the getaway. And it may be that you decide that you're going to do more short terms in that period when there's less demand, right? You might not get somebody who's coming for a 30-day stay.
Right.
So I think that it's worth considering which properties are situated in which markets, what the opportunity is for that market based on, the demand for people coming to that area, that local community.
Okay, very cool. And I use a what's called dynamic pricing software, right? So I know
Mm-hmm.
Airbnb has it suggested and all of these things, but there's a software that I use that's pretty reasonable. It's called Price Labs. And inside of Price Labs, we'll have to look to see if it integrates directly with Airbnb. I integrate it through my property management software, right? So the way mine works is I put all of my listings on my property management software. That property management software will push the listings to Airbnb, VRBO, booking.com, all of the different channels.
That's
So I'm
amazing.
just on Airbnb and it syncs up, right? So if it books on one channel, then obviously it blocks the calendar on all the other ones automatically.
Mm-hmm.
Right. But I
Yeah.
can integrate Price Labs with that. And Price Labs, what it does is it'll use market data. It'll show you, supply and demand, what things are going for. Right. Our prices are never the same night after night. Like every night is a different price. And every evening, Price Labs goes back in there and it adjusts the pricing based on supply and demand, weekends, holidays, events that are going on. And then we can also set it up seasonally. We can set the minimum nights that we want booked, right? So, as an example, if I'm targeting midterm rentals and I don't want that week or 2 week gap in between, I can set it to where, hey, for the next ongoing 14 days, allow 3 night bookings or 2 night bookings. But
That's
for
amazing.
14 days forward, then try to demand that 30-day reservation. And I think like looking at some of your previous bookings, how far in advance did they book? If they were booking like for 30 days and they're checking in today or tomorrow, then you might not want to use that strategy. But if you see that they're
Yeah.
booked a week or two in advance, well, leave the calendar open for some shorter periods during that time.
Yeah.
Help fill those gaps.
Yeah, no, that's a great call. I've found that my medium term bookings, listen, you know when you're going to be gone for a whole month and you know well in advance. It's not the kind of thing that pops up on you on a Monday and you got to be out by Friday for 30 days, right? So my medium term bookings, especially for the condo in downtown Silver Spring, are booked out, I want to say through April 2025. So I've got a good lead time on those for right now. I could set for there to be some short term bookings in there, but it's just a lot to deal with, and I've got so much other stuff going on between this job that I work, my podcast, etc. Family life, and other hustles. It just while it could be lucrative for me to be very very detail oriented, there's a cost benefit analysis to spending the time to get a couple of extra dollars when I could spend that same time working on something that's going to be truly lucrative in a much larger way. So, and if I had a team that, was going to be able to focus on something like Price Labs and make it really,
Right.
adjustable, that would be amazing. I'm just not there.
Got it. Got it. Yeah. And, if you think about that, if you want some introductions to team and people that actually can help with that, if that's something that you want to look into, obviously, we can talk offline about that and I can kind of
Yeah,
list.
I'd love to hear more about how you're using Price Labs. It sounds wonderful.
Yeah.
I
Cause you
like
would
that a
think like,
lot.
hey, I'm like 47 listings. You would think my phone's blowing up and I'm kind of going crazy over here. Right. But I've got a team in place. They're all managing it all. You know what I mean? I get to manage the team and I've got a team in place to manage the team that's managed it. You know what I mean? But,
Yeah, yeah.
uh,
That's what I
it
need. I
doesn't.
need an executive assistant to sit there and say, "This is what Damon wants, and are you executing on it?"
Exactly.
That's exactly where I need to be.
That's what we all need. And then we need somebody to manage the team you delegate to, because half the time you delegate something and then they're coming back to you for stuff. And then I'm the bottleneck because now they're waiting on me. It's like, wait, didn't I
I'm
do this?
telling you, that's the worst thing you can do is be the bottleneck. Philip, I
Exactly.
want to go back for a second because I want to tell a quick
Sure.
story that I think is going to be helpful for those who are starting out in real estate. Because I said, before I started with identity, and I
Yes.
wanted to hit on this because it quite literally is the epitome of taking the identity and running with it. So basically, the short version of what happened is when I took on this identity of real estate investor, I did all the stuff. I put the website and I got the business cards and all the things like that really invest in it from like the superficial ways that one might consider themselves a real estate investor. But then I also started telling everybody, this is what I'm doing. And I was talking with comedically, it was a former girlfriend from college who was moving back home, and she was telling me that she was moving out of the area. And I had already told her that I was a real estate investor, and she said, "Well, I'm moving out of my property here." And I said, "Well, I'll buy it from you." And I said, "I'd love to see it. I might buy it from you." And she said, "Sure." Right? This is an easy sale for her, right? She's is somebody she knows and trusts. And I ended up buying the place, and I'll tell you, you talk about buying under the market. This place, I hadn't realized was basically a bit of a hoarder and hadn't been cleaning or anything. This place was terrible. But I got a great deal for it. And I ended up stripping the thing down, not to the studs, but I cleaned it all the way out. And I made a beautiful property out of this joint with my contractor who did all the work. And my point in saying that is by identifying as a real estate investor and telling people this is what I do, I put it out into the universe, I put it into people's ears from my own mouth. They heard what I said and people started sending me stuff, but I also, attracted this former college, colleague of mine, and she ended up telling me that she was selling a property. So when you're truly invested in the process, identify as the professional who was doing so, and a lot of great things will come to you. I'm sure you've had this, Philip, where people have brought you all kinds of stuff that's not in your sweet spot, in your buy box, but because they know you are a real estate investor, you are somebody they think of automatically. And they'll tell you, "Hey, I saw a property over there." And, it's just stuff you didn't even solicit.
Absolutely. And people ask me all the time, Philip, where do you find the deals, the off market deals? And, it's a combination of marketing, it's a combination of relationships. And identifying as a real estate investor, letting the world know, right? That's what these podcasts are for. That's what social media is for, is to just share what you're doing. And, we talked about purpose earlier, right? And when you put a purpose behind the passion, that gives you the boldness to go out and actually tell the world what you're doing. It's not to toot my own horn and be like, hey, look at me, right? But it's more to like inspire others. Like if this little guy, Phillip, got started at 21 years old, can do this, anybody can do this,
That's
right?
right.
It takes
That's
that.
right. And I think that people also, for anybody who's doubting themselves out there, I always say, who better than me? Right?
Right.
If not me, then who? And if, I look at Phillip, if that guy can do it, I can do it. If that a guy over and that girl over there can do it, I can do it. Who better than me to pursue this? And with that kind of positivity, you're unstoppable. As long as you educate yourself and you take the calculated risks, you find mentors like Phillip and JT and all of the folks in the JT Fox community, and they will guide you, man. There's enough knowledge to go around. There's enough money to go around. And certainly as we work together, we can find deals. So definitely go forth with positivity and you will find your path.
I love it. I love it. And I want to end with this question. And I think this is just something that came to mind now, because as we're talking, it's like, hey, I started when I was 21. You mentioned 15 years ago, your first deal. And I think the next best time to start is now, right? You've all heard it. Like the best time to plant a tree was 15 years ago. The
Yeah.
next time is now. But what would you tell your younger self, like looking back now, if you could look and turn around and be like, hey, 21-year-old Damon, this is the path you're going on? Or what's some advice that you would give that yourself?
I would tell my younger self to start even younger, right? That you should have started a long time ago. Because I watch my son and I love him and I'm so proud of him, but the amount of time he spent sitting on the couch playing video games, he literally could have started a business and he could be independently wealthy and, make the choice if he wants to go to college versus feeling like he has to, because that is the linchpin for, societal's view of success. And so I would tell my younger self, save more, work harder, and invest for the long haul. That the young guy you are today is only the young guy you are for the moment. That you are actually investing in Damon's future happiness. And that starts with these pennies that you're pinching right now, this extra money you're trying to make that you're pushing aside to save. I would tell 21-year-old Damon to start at 17 or whatever the thing. I mean, I would just really have gone much, much harder. And even so, for the person who is out there sort of working their 9 to 5 as I do, I would also encourage you to think very, very hard about what you're spending your money on and whether you really need to be out every Friday and Saturday night, right? Those are productive times. It's the grind that you do in the dark that really pays off in the light. And it's the kind of thing that you really have to be truly focused on. And if you're not, it's not going to just come to you. Nobody's going to hand it to you. You got to do it yourself. And that kind of personal investment, I think, is incredibly powerful.
Man, I love it. The grind that you do in the dark reveals the man you are in the light. Man, that's amazing. I love it. Thanks so much for sharing, Damon. It's been awesome to have you on the show. And before we end, what is the best way for our listeners to connect with you after the show, Damon?
Absolutely. You can find me on Instagram. I am Damon L. Davis. And you can find me in the JT Fox network with Phillip. So anytime you want to connect with us, you can find us with JT Fox at Mega Success in November and all of those other places. So hopefully you will join the community with us. It's a wonderful place to be, so much learning. And we look forward to taking care of you and learning with you too.
Cool. That's amazing. And we'll share some links down below where you can find Damon's podcast and other ways for you guys to connect. And hey guys, that's a wrap for today's show. I want to give a huge thank you to Damon for joining and sharing his invaluable insights. So if you're intrigued on this journey, right, or if you want to learn more about my success and see some previous interviews from guests like Damon, be sure to check out the link in the comments and just click and leave your thoughts, right? Additionally, if you're looking for funding for your deals, or you have deals in capital that you'd like us to consider, or if you're interested in seeing what we do firsthand at my office behind the scenes, all the information will be listed below as well. And if you know someone that you think would be a fantastic guest for my podcast or even Damon's podcast, then your introductions are always welcome. So please do us a huge favor, like and share this podcast on Spotify, Apple Podcasts, and it makes a huge difference. Your reviews are especially appreciated and they help us to reach more aspiring investors. We'll be back soon with more insights and stories on your first real estate deal on the way to millions. This is Phillip and Damon signing off, and we'll catch you on the flip side.
See ya.
All right. Thanks again, Damon.
Yeah, brother. My pleasure. It was good to see you, man. Thanks for this. This was awesome.
Yeah, it was good. We'll have to connect again and maybe get together at Mega,
Absolutely. Yeah, I'm looking forward to being there.
We'll be in lunches together the whole time, probably. So.
Absolutely. Yep. I'll be up in the front with you this time.
Cool. Well, hey, congrats. Thanks again for all your feedback. I always appreciate you.
Absolutely, brother. Here's to your success, man. I'll talk to you later. Take care. Thanks for the opportunity. Bye.